people don't, but I'm good. I'm good with it. It actually is really good for your skin too.
It's healthy. It's
Yeah.
healthy.
Yeah. Yeah.
It's good for your lungs too.
It's too dry. It's too. I started getting all these things that you get from like dryness, literally dryness. I don't. When I lived in California, I had skin problems that I never knew existed. As soon as I moved here, completely gone. So very, very happy about that. Very, very good. And the air.
Fountain of youth. Ponce de
Well,
Leon.
also the air quality is a lot cleaner here because you don't have the congestion. I mean, the sky, the atmosphere is bluer. I mean,
the humidity and the constant moisture in the air, it sucks a lot of the pollutants out. It absorbs. And so it's like that whole process of renewal. It's cleaning. It's constantly cleaning. That water keeps it fresh.
Makes perfect sense, actually, now that I think of it. So tell me, what are you seeing? What trends are you seeing this week in the market? What are you seeing developing? What's going on?
It's wild, man. Like you're seeing these stock. We've been on this thing for a month now, and we've been right. And I've been being able to hold two thoughts in our heads at the same time. It's possible that you can have bullish gold. Gold keeps going. Silver you've been on is like making an extraordinary move, and still be bullish on a lot of the stay-at-home stocks. I don't know if you've been seeing some of these companies they're just breaking out still. PayPal today making new highs. All these stocks are just straight up.
Actually, I was looking at what was the name? There was a company that I profiled a while back, Teladoc.
Yeah, I remember that. Yeah, it was good.
And Livongo, Livongo Health, I think it's called.
Yeah.
They were bought out. One company bought the other, so they're going crazy today. But there's a lot of structuring, restructuring.
Yeah.
There's a lot of upside from these stay-at-home stocks. You know what's interesting though? The S&P's trading above the 200-day moving average. But if you look at the overall market, the overall stock market, meaning when I say overall stock market, let me define what I mean. Stocks that are trading above $5 a share, pretty much all the stocks out there trading, that have reasonable. Only 45% are trading above the 200-day moving average. In other words, if you look at the smaller stocks, if you look at the Russells, if you look at the S&P 600, most of the. It's kind of like usually you'll see some lead, some follow, but in this case, it's like all or nothing. You're literally seeing 50 stocks or 100 stocks going crazy, and the rest of the market just completely being ignored, and that's troublesome,
But isn't that like an indication of just like what's happening in this, what's happening in the broader economy and society? It's really like, most people are going through a very real recession, but a few people are not experiencing anything. They're experiencing liquidity. They're experiencing an excess of cash. They're experiencing money available for really cheap. And so, the haves and the have-nots, it happens in corporate America as well. It's happening with companies. I mean, if you have a good balance sheet, if you're making money right now, the world is opening for you, because there's a lot of, frankly, there's a lot of there's an existential crisis for a lot of these businesses that they might not even exist down the line. I've been saying that since the beginning of the crisis.
You have.
I don't feel like a lot of these companies, I feel like they've been kind of exposed as being maybe not super necessary to life. And the premium we're paying on certain companies are those deemed very necessary.
And I think, and I believe till there's here's the thing, and this is from a perspective of medical companies.
Yeah.
And I was really careful. I was watching this and paying attention to this because a lot of medical companies like Pfizer, Moderna, they came out and they said, we're going to have something. We're going to have something. And now Pfizer, Moderna, I'm not sure, but Pfizer is a pretty conservative company. I mean, they're very, I mean, they're I believe they're not a hype. I mean, there's no hype there at all. I mean,
two different types of companies, Moderna and Pfizer, almost like the polar opposite of how they do their thing.
But here's what I was looking at. I was looking at interesting things. I was thinking to myself, well, if these companies are going to have something, because there's a lot of companies working on a cure right now or a vaccine. So I was thinking, well, so here's what my thought process was. Are we going to start seeing a less interest in other stocks that may be working on a vaccine or a cure, but may not be, the cure or the vaccine may not be out for another year after Pfizer comes out? So I was kind of curious how that would impact. And you know what? It hasn't had an impact at all. It has zero. But that's telling me something very important. What that's telling me is that, we as lay people, I mean, I don't know anything about these. I mean, you and I can talk about stocks, but when it comes to genetics and bio, we're not experts. No,
we don't know.
No, we don't. But they do. But they do. So I was thinking to myself, well, if I'm a competitor and if I'm going to come out with something down to 6 months down the road, at least, or a year, and I know that for a fact, I know I'm not going to have something on the horizon at the same time. How is that going to impact me? And it hasn't. And what that's telling me is very significant. What that's telling me is that even when Pfizer and Moderna comes out with something, and this is not me talking now. This is being backed up by these third party companies.
Yeah.
It may be too expensive. It may not be enough. It may not work on everybody. There may be side effects that are not susceptible to everybody. Look, when Pfizer came out with Prozac, did that put an end to SSRIs? No, that was just opening the door. No. Paxil, Zoloft, all the
this is the thing. This is there's no precedent for a worldwide pandemic that you have 7 billion people on the planet. Right now they're saying that you can procure a certain amount for first world countries like the United States, United Kingdom, Japan. These guys have paid already for vaccines that haven't been created yet. Like they've paid for hundreds of millions of doses for each country, right? So to procure them. The thing is that none of these companies alone will be able to satisfy the need because it's constant. It's every year you have to redo it, right? So just to fulfill like this global demand that's unprecedented, I think it takes the entire industry. It's not something that one company can satisfy.
Exactly.
In my opinion.
No. As a matter of fact, it's not just your opinion, because when I was reading these articles and research, a lot of companies are renting from others they're working. There's a lot of contribution here.
Why do you think Kodak wants to be a pharmaceutical material creator? Why do they want to be in the stuff that goes in the pills business? Because then they can play off the whole thing, right?
And get into the generic side, which undoubtedly and inevitably will be here. I mean, they're just thinking far ahead, which is very, very smart.
Well, let me ask you something. While we're on the whole pandemic tip, I've been thinking about this. Okay, about like how we're going to come out of this, right? So, good news. There should be a vaccine by this winter. Everybody's saying it. Even dour Dr. Fauci is like late fall, early winter, you're going to see an approved vaccine, okay? But a lot of people don't want to take the vaccine, right? And here's another factor. We have a vaccine for the flu, and you still have 60,000 people a year die from the flu.
Right.
So it's not a cure. You're going to have a vaccine, and you're going to still have people scared witless of getting this thing because it's a much worse, more severe virus, specifically for compromised people and the elderly, right? So under what do people think is going to happen when a vaccine comes out? Do they think that fear is going to just disappear?
Exactly. Well, here's the thing. I think what you're saying right now is the crux of where I'm going. I think it's exactly where I'm going is when we first started talking 2 months ago about there's going to be a vaccine, you started seeing a rally. But people are now thinking ahead the same. How you see, here's the thing. If third-party medical companies, not the primary, but the secondary, but the third, all these derived companies are still holding up hard and they're not going to come out with a cure for a year, it means it's going to be exactly like you and I are predicting. It's going to be a very bumpy road out of this. It's going to take a long time. And it's not just going to be, because I was talking to somebody the other day and they were saying, well, tomorrow there's going to be an announcement that the pill comes out and all these stocks are going to, no. there's going to be, I was talking to some analysts. They weren't traders. They were analysts. I said, no. I said, if that was the case, then you would see 3 biotech stocks making 52-week highs and the rest just fall on their face.
Right.
This is just the beginning. This is just
right.
So
this is the beginning, and that's just the vaccine. There's going to be therapies. There's an entire therapy industry that hasn't even the race has been to make the vaccine. The focus has not been on making remedies per se. Yeah. Okay, hydrochloroquine, remdesivir, et cetera. But there's going to be a big scramble once the vaccine's in place to come up with the best kick-ass, Z-Pack that you can get for this thing. And that hasn't happened yet. So we're in the early innings for the whole.
And then government subsidized recovery.
Government subsidized everything
because it weakens your lungs. So they're going to have systems to straighten your lung. I mean, it's there's going to be a racket, when it's all said and done.
Of course, but it's also think about it, Roger. Politicians go to the most popular, most universally beloved concepts, right? So it's when you say let's save children, most people let's save children. It's the same way when people are well, we want to earmark a couple of $1 billion to drug companies to develop therapies. Yeah, do it. Go. There's not going to be anyone that says, no, don't do that.
Right.
That's a unilateral thing, right? So it's kind of early days.
This thing, based on what I'm hearing, based on what you and I are talking about, this thing is going to be on the forefront for the next couple of years.
At least. Yeah. I mean, you just have to get used to, you just have to make peace and get used to the reality that this is going to be the same way. Let's look at big issues, right? Do you remember 9/11? Obviously it was a terrible day. It was a terrible circumstance, right? But 9/11 wasn't just a day. It was a turning point for the country that affected everything for many years.
It was the happiest
in the markets. Do you remember, if somebody would leave a bag at JFK or something?
Oh,
it would come across the Bloomberg ticker, and you'd get a 200. You'd crash. The market would crash because unidentified package.
Wait. I got a better one for you. Oh, let me tell you the story. This is a crazy story. This is so relevant to what you're talking about. A week after 9/11, 1 week after 9/11, literally 5 days later, a tiny plane in where do they make clothing in Italy? Tip of my tongue. Milan. Thank you. Milan.
Yeah.
Tiny plane. This is a true story. A tiny plane hits a building, a 2-person plane.
I remember that. A Cessna plane. I remember that.
It was nothing to do with it. Do you remember what happened?
I remember that. Yeah, I remember the market crashed.
You reminded me of that. The market literally crashed. Jeff and I are not making this up.
No, it crashed.
And I was going to say it was also 9/11 was a sad day for this country, but it was also the happiest days for manufacturers of airport security equipment, because we all know that changed everybody's life forever.
There's things to do, financially. But the point is that I'm trying to make is that it was many, many years for it to work itself. I mean, people, now it's, thank God we haven't had such a big terrorist crisis, specifically in the United States. But it took many, many years for people to get out of that mindset that going to a mall or going, you know what I'm saying? It's still in the back of people's minds when they travel, but it's not it was there. It was a
cloud. It was a cloud over our head for several years.
It was front and center on everything, travel companies, Disney, et cetera. It was front and center. This is bigger. This pandemic is bigger. It's more real too. And it affects way more. It affects everything.
And everybody. And it doesn't matter how much money you have or
right. No country, no politics, no race, no religion, no color, nothing. Everyone.
Yeah. Agreed. So you and I are saying the same thing. That we both believe that this is going to be with us for a substantial period of time in one way or another.
Oh yeah.
So
100%.
I couldn't agree with you more. So folks, don't think, and this is very important because a lot of people think the day this cure comes out, that's it, everything's different, we're back. No. That's the first step in 100 steps. First step in 100 steps.
If you're buying a stock right now, anticipating that they're a brick and mortar type of company that was severely affected, that saw their revenues and their sales, collapse by 70%. If you're expecting them to bounce back to Q4 2019 levels anytime soon, you're insane, because they're going to be running at a diminished capacity no matter what. There's, planes are going to be flying half capacity, like restaurants, hotels. Disney can only allow in a certain amount of people. Malls organically have less traffic. Our mall's open here. I haven't been to a mall. I'm not going to the mall. Why would I go to a mall?
I haven't either. And I need
stuff. I need stuff, man. I want to go buy stuff, but
for the first time in my life, and Amazon's been for a while, and my wife's been buying clothing online for probably the last 20 years. For the first time in my life, I am buying shirts. I'm buying shirts online without trying them on. I wouldn't even imagine doing
I know.
6 months
There's
ago.
certain things you just can't, like pants, right? Like jeans. Okay. You can't
Exactly.
buy,
I can't.
buy
I still
jeans
can't.
online. Jeans, you got to see how they look. They got to fit or not, right?
Right.
Shoes.
Exactly.
You got to take a few steps in some shoes. You got to see if
shirts. I can go as far as shirts, but that's as far as. But I wouldn't even imagine doing that 6 months ago. I wouldn't even think about doing that. And I have not gone to the mall. You're absolutely right. And I'm not going. We're actually going out of town this weekend. We're going to. I'm following your steps. I'm going to Hilton Head.
Lovely. You're gonna enjoy
it. Away. Yeah, I've never been there. Far away. Anyways, but let's talk about it. Let's talk about something else. Let's talk about the energy market.
All right.
What do you think I've noticed that barrel prices have been kind of staying between $40-$43.
Yeah.
What are you seeing?
I'm seeing this is a dollar. This is a dollar collapse. The DXY is down 80 basis points today, which is a huge move. It's a double-sized move intraday for the dollar. And so people are panicking out of dollars. And as you know, as dollar gets weak, hard asset prices go up.
Of course.
Dollar down, hard asset prices up. So that's been a tailwind in the precious metals, and it's been a tailwind in energy. I have been, you got to come full circle. I have been dead wrong on the dollar for about, I don't know, like the last 2 or 3%. I thought the bottom was in, but I'm changing my tune at this point. I think there's going to be a capitulation type of crescendo dollar collapse that you're going to back, like kind of the stock market did in March, which we're going to rally back hard from. But I have to wait for that to turn before. So, constructively speaking, I think that could be a tailwind for energy. I think energy has that COVID hangover that it's just not going to be able to shake, because the reality is that barrels are stocking up. People aren't traveling as much as they should be. People aren't flying the way they should be. People aren't driving to work every day. I fill my car once a month. I fill my car with gas.
Yeah, that's about how long I've been, right? Yeah, about once a month. And electric vehicles only represent...
Electric vehicles. I mean, come on, dude, listen. So they're already, if you want to talk, so there's secular changes in the way things happen. We talk about this a lot. What do I mean by a secular shift? I mean a long-term trend that changes the way people live life. Energy has been on a secular decline for about 20 years. Let's call it what it is. It made a high in the early 2000s, and it has really struggled with everything else doubling, tripling, other asset prices. Energy has a hard time going because we've just seen the improvement in battery technology, electric vehicles, solar. Everything has become more efficient. Natural gas is more useful. So the need for a full barrel of crude is constantly on this diminishing slope, in my opinion, long term.
Which is why the ETF, I like this one ETF, ticker symbol KARS, CARS.
Yeah.
It's electric vehicle and future mobility ETF. Ticker symbol, for those of you who are interested, it's ticker symbol KARS.
Yeah.
It's one of the ones I'm looking at. And it doesn't just invest in Tesla and Plug. It invests in a lot of companies. Google,
yeah, the batteries and the technology. And
anything that has this much exposure, like
lithium. Yeah, right.
So it's a good way to get into that. And folks, you may want to consider something with energy, shorting energy, buying that like a linked stock, for example. Just
listen, if also linked stock, you hit my money link. But listen, here's the reality. We also are in a political year, right? And it's looking, This is the thing. We all have our tendencies. We all have our biases. We all have our hopes. We all have our fears. We all have our preferences. But as traders, as market participants, we have to recognize what our own biases are, but we have to be as objective as possible on different outcomes. So people ask me all the time, oh my gosh, if Trump wins, if Biden wins. And I say, look, I have to have a prepared plan for both cases. Right now, the probability and the possibility is very high that Joe Biden is the next president of the United States, right? What's going to come with that is going to be a huge Green Deal. It's going to be like the new Green Deal, which is going to be the death knell of energy stocks, traditional Exxon. Have you seen Exxon?
I have.
Stocks struggling. Their numbers are struggling. They can't make any money. That's going to be the debt. If you want to figure out what to do if Biden wins, be long green energy, be short traditional shale and traditional energy companies.
Yeah. I could not agree with you more. Or at least, folks, be prepared for a lot of volatility coming our way as we head into the election, especially because we're going to have a lot of uncertainty. And please listen to what Jeff is saying, because most of your pension and your portfolio funds has exposure to blue chip stocks. And those blue chip stocks have exposure to energy, whether you like it or not. So we're giving you a lot of heads up that there's going to be volatility in that sector.
The energy sector used to be 10% of the S&P 500, and now it's under 4% or something like that. And this is a sign of what was happening in reality.
Well, it's the sign. I mean, look, if you look at the Dow over the last 100 years, you're seeing a huge shift away from industrial and a lot more into, Hewlett Packard and Apple and so forth. So it's just going to continue that way. And the bottom line is, we're expanding green energy by 20 to 25% per year. And again, only 3% of the world is using it for cars right now. And we're talking about 15% by 2025. So
listen, I'm telling you right now, if you're fighting this tape, if you're fighting these high flyers, you're doing it wrong. There's a reason that the United States is having horrific time with the virus, but the best stock market in the world. And it's not just central banks, because believe you me, every central bank in the world is playing the same game right now. The printing press is on. The reason that the U.S. is crushing both Europe performance and Asian performance is we have the biggest, best technology companies in the world. We have the innovators. So if you're stuck in old world stocks, you're going to continue to see underperformance.
No question. Absolutely. Jeff, let's leave it at that. I think that was a very good review. I think we covered a lot of ground. We talked about the energy market. We talked about the longer lasting effects of COVID-19, something we have not talked about.
One last warning. One last warning for this week. We have the jobs number, big jobs number on Friday. Today, we had an ADP job number, which is a private company giving their payrolls.
It's always a good clue to what to expect. Yes.
It's a clue. It's a preview. They were expecting 1 million new jobs at ADP. They got 160,000. Now the stock market's still up today. Stocks are acting well. They took it in stride. But just understand that this is the baby number. The big daddy's coming on Friday.
You see the swing of the here, I wanted to give you this. Let me show you the I was looking at the expectations on this. And these expectations are crazy. Let me I'm sharing a different screen, but I want to show you this so you could see what I'm talking about. Cool. Look at the consensus estimates here. Let me just give you this real quick here. From 350,000 to 2.5 million. That's the range. Can you believe that?
These guys are just
they don't have no. It's like
pulling numbers out of a hat. They're just pulling numbers out of a hat. I don't know.
Yeah, so that tells the story right there. 250,000 to 200 million.
Well, listen, Roger, they missed it on the first snapback, and now they're expecting this fluid trajectory, this linear recovery, and it's just not happening. We're not in linear times. We're in just jumping around times right now, choppy times.
So it's folks, don't try to fade. Don't try to fade this market. Don't try to second guess this market. Don't try to think ahead. Ride the momentum. find stocks that are doing especially well because of COVID-19, because what happens is now one stock out of 10 is seeing strong accumulation. That's the one you want to go for, because the money that was going into 9 stocks is now going into that one. It's concentrated.
What people don't understand too, Roger, I don't mean to interrupt you.
No,
it becomes a self-fulfilling prophecy. As that company becomes stronger and richer, their opportunities to do different things increases. So you can say, well, they're not worth this. If, from a fundamental classic basis, that stock shouldn't be worth this. But all of a sudden, they have this different scenario because they have all this money. They have all this cash reserve. They have all this borrowing power. And then guess what? They acquire different businesses. They start new businesses. That's how the game, that's life, man. Momentum breeds momentum.
I couldn't have said it better myself. Folks, thank you, Jeff. Thank you very, very much. It was a great session as usual. I appreciate it. Folks, please send us some love letters. Send me, that's what we call them, love letters. Reach me at support@marketgeeks.com. You could reach Jeff at joyofthetrade.com. Please feel free to let us know. We'll take criticism. We'll take positive feedback. Anything you want to throw our way, we will take. Jeff, thank you.
What do you want to hear more of? Like, ask. Tell us what you like us talk. Like, what topics do you like?
And we will cover them.
We cover a lot of stuff, but like, what do you really enjoy about these conversations so we can hone in a little better? Because we just freestyle this thing. We have absolutely zero preparation on this thing.
Zero.
We prepare in the sense that we work very hard studying the markets, but we don't script it, is what I'm trying to say. It's not a rehearsed thing.
Right. Absolutely. No, this is all freestyle. We know we have to get on at 11:30. That's what we do. We don't talk before then. So this is completely our opinions. They're not censored in any way. There's no agenda here. We'll throw the good, the bad, and the ugly your way. And please, please, please don't miss next week's midweek meeting with Jeff Zenaneri and Roger Scott. And I will talk to you guys later. Thanks, Jeff, and have a great Wednesday. Bye.
Thanks, guys. Bye, Roger.